TJ, the Wheel Deal coming at you live. It is Tuesday, June the 3rd, 10 a.m. Central Time, Texas time. And we're going to do a little episode of Technically Speaking. We're going to see what's going on with these charts. I got the link there in the chat. And Uzi will hopefully be joining us. Sent me a text. He said it was available for 30 minutes or so. So that's what we'll do. We'll wait on Uzi to log on. In the meantime, I'm trying to get my TV going over here in the background so I can see the tickers. I put it on CNBC so I can see what's going on with the market as far as, have the little tickers going. Looks like the market is up a little bit today, so we'll get into it. In the meantime, what I'm going to do is feature the spreadsheet. Let y'all know what's going on with the portfolio, kind of go from there. So let me get this a little bit larger so it's a little bit easier to see. So let's get into it. So what do we have here? We have an Amazon short strangle. So we have the short put at 200 and we have the short call at 220. It's currently trading at about 207. It's 200 contracts. Premiums received. This is a combination of the initial trades plus the rolls. So gotten a total of 205,000 on the put side, 151,800 on the call side. The expiry is 8/15. They're both out of the money. The total put collateral, the collateral for the puts, if it was cash secured, but that's not the way that it really works on the Tasty Trade platform. It'll be $4 million. Potential market value on the calls, if I had to deliver those shares, those would be worth $4.4 million. It's a sweet spot trade. So the sweet spot is between 200 and 220. And this just shows Amazon. This is something else over here. So I'm going to put this here in yellow. This is the status of the, I'll put this in that color right there. That'll work. That's not so bright. That's the actual shares. So anyway, that's Amazon. Now let's talk about CleanSpark. So what do we got going on CleanSpark? This one's a covered strangle because we own the shares. So it is $8 at the put, $11 on the call. It's trading at $8.94. It's 250 contracts. Received 15,750 on the short puts and 10,250 on the short calls, expiring on 7/18. $200,000 in collateral. If I had to deliver those shares, it's $275,000 worth of shares. There's a sweet spot trade in between $8 and $11. So that is what's going on with that in a nutshell. What's going on, Uzi?
TJ, good morning. How are you, my friend?
I'm good. How are you?
Hanging in there. Another day in paradise here, right? We're moving up. Tech is leading the way every day.
I'm telling you. Well, I'm about to get to Tesla. So if you want to start pulling up your Tesla chart, sure. I have the puts at 300. I've got the calls at 470, and then I bought some leaps at 450 in the distance to kind of protect against the upside. And it's not a full-fledged hedge, but it's okay. But I call it about an 85% hedge. So I'm okay being a little bit exposed to the upside because I just don't think Tesla's going to get there. But I'd be happy to be wrong too.
I'm sorry. Where were the leaps at what price? 500?
450.
Oh,
but 450. But those are for January of 27. Okay. The short strangle expires January of 26. So 300 on the low, 470 on the high. Gotcha. And so let me keep showing that and give you time to get ready on that end. So then we have an in phase short put or a short strangle sweet spot trade 40 and 55. It's currently at 42.51. Collected quite a bit of premiums expiring in August. Google is another big short strangle. It's 100 contracts, guys, and it's a sweet spot trade, 165 to 185. The reason I say sweet spot, because if the stock is trading in between those levels at expiration, that's a sweet spot because both the short put and the short call expire out of the money. Collected quite a bit of premiums, and again, this could be the initial premiums plus rolls. That is what it's worth right now. That doesn't mean that I necessarily collected all of those premiums. It's a real big trade, 1.6 million. Then we got the Palantir massive short strangle. This is another one I want Uzi to pull up. I got the short puts at 110, short calls at 150. It's 500 contract, gotten about almost $400,000 in premium. So it's $5.5 million. And again, it's a sweet spot, 110 to 150. Then we got a Riot. This is a covered strangle, and it's $8 and $10. It's currently at 870. So there's no pressure to the upside on this position because we already own the shares. That is the difference between the short strangle and the covered strangle, is the fact that it's already covered. You already own the shares. So the risk is only to the downside. To the upside, you can leave money on the table. That's opportunity cost, but that's not really a risk, if that makes sense. And those expire in July. And then the SoFi short strangle that I have, even though it's technically not a short strangle because they're different expiration dates. The short put is at 13 for January. So it was at 12. I increased it to 13, brought in a lot more premiums. 597,000 total is what I've collected on that, on the short put side. And then I'm running cover calls against it. So it's a different type of poor man cover call. Instead of buying the leap, I sold the leap, and then I'm selling calls against it. And I'm at $16 for July on that one. Then I got Soxel at 13 and 23, picked up about 11 grand for July. And then this is the massive Tesla short strangle, 300 and 470 for January. Picked up 2 million on the put, 1.7 on the call. And there's a lot of rolls involved here. So this isn't all the premium I would make. That's what's baked into the cake, though, because it's like trading in a car with negative equity, and it's a $15 million trade on the short call side that had to deliver $23.5 million worth of shares. Keep that in mind. And then on these are actually leaps right here. Bought the leaps at 450, paid $4.1 million for that insurance policy. Crazy. And then I got a TSL short strangle, 12 and 20, 100 contracts. So that is what we got going on in a nutshell. Let's turn it over to Uzi. Uzi, what is the Mel astrology telling us right now?
We're starting with Tesla, right? We're starting with the Mac Daddy in your portfolio, right?
Might as well. I mean, it probably is about 50 to 60% of what I got going on.
Yeah, let's pull that up and start taking a look, and let's see if it's going to go to 300 first or 400 first. I think you have a bet on that one, right?
I feel like I was feeling real good about it until this morning because Tesla opened up with
I heard you have a New York pizza bet on that one.
I'm telling you, I'm gonna. I don't know about that shop that you talked about, but there is that pizza place in on Bleecker Street that's phenomenal. Or we could do Grimaldi's under the bridge, right? Close to the Brooklyn Bridge. There's a Grimaldi's. It's the original.
There's a million places to have pizza in New York. No problem. No shortage of pizza places for sure.
Then a good pizza place.
Real pizza. Real pizza. Yep.
So talk to me, my man. Talk to me. What's going on here? Appreciate the guys tuning in. I know Amit's still on, so I appreciate you guys tuning in. We got 236 people that have seen the link on X, 31 people rocking with me live on YouTube. I'll tell Amit. I won't tell Amit that you guys are over here. Dex, what's going on? Ed, Mr. G, Danny, Wheeling, Stefan, SJ, T Billion. Oh, yeah. You're feeling real good there. Good for you. Hey, Jesse, how are you?
I'm just going to start putting some levels on the charts as you guys are saying hello and everything. I'm just going to start putting some levels on. So, TJ, you've got the 300.
300 on the put and 470 on the short call. And these aren't completely naked anymore because I bought leaps as some protection. Now, in a perfect world, you want to buy you turn it into like a call credit spread where I would buy the leaps at say 480 or something like that for the same expiration date, and then you're just out the premium right for those. But I didn't do that, or I could buy them at like 400. That would be like the perfect hedge, right? Because I could because as soon as the short calls really started costing me money, well, by that time the leads are starting to print and the deltas are offsetting each other. The money that you're losing on the short call, you're gaining it on the long call, and that's ultimately what you want. But what I'm betting on is that Tesla's going to stay at these levels, and I'm going to make the money on the short put and the short call, and I use that to fund 500 leaks, essentially, or pretty close to it. And then whenever that happens next year, I'm going to be putting on these short strangles again to essentially run a poor man cover call campaign, but more aggressively, not just selling the short calls, but the short puts as well, and bringing in more premiums along the way, because next year the theta decay will be very serious because we're going to be inside of a year and it's 500 contracts. And if you don't think theta decay is the real thing, those leaps are costing north of $4,000 a day in theta. Because if you're not collecting theta, you're paying for theta. And whenever you have a leap of that magnitude, it's the largest leap of my career, you go and you start looking at those numbers, and holy moly, Uzi, 4,000 plus a day in theta. The last thing you want is for SoFi to stay flat here. But at the same time, on the other side of the coin, I'm collecting a lot of theta on the short puts and short calls. So it kind of balances out to a certain degree. So talk to me.
It does. And it does. And you're getting probably better theta out of those short 300s than you are the 470s. All right. Yeah. So right off the bat, let's take it one step at a time, real simple, beginner type stuff. Where are we as far as technicals and moving averages? Are you below? Are you above? Because that usually will indicate what trend are you in. And from all the moving averages that I like to follow, which are short-term momentum, medium term which is about the 20 moving average, and then the longer terms, which are the 50 and the 200. You're basically stacked they're all right on top of each other. You've got the 50 is below. And by the way, the 50 is heading up toward the 200. Now, if we get a 50 through the 200 to the upside, that's called a golden cross. So if we get the 50 to rise through the 200, which is the brown dots, that's going to be, an impetus to potentially run it even, higher from these levels. But, just from the starting point, all the moving averages are in the bull's favor. There's no signs of any type of a weakness. It is consolidating a little bit here, but again, it did have a nice run up, all the way from these lows, this triple bottom low. We had basically a triple bottom low here, which, coincided with all these lows we talked about last time over there. So right now it's just consolidating, and it's still making higher highs, because here's a high, swing high, and then here's another swing high. So nothing technically is showing any signs of weakness. Now, we have the moving averages. That's step one. Okay, we can look at the RSI to see on a daily, are we a little bit overbought? And we're close. It did get a little bit overbought here for a little while. It fell back below it, and now it's catching its breath. And you can even see that we have within the RSI a little bit of a beautiful cupping pattern here. So, when you have a cupping pattern as well as the cupping pattern, on the RSI showing up as well as maybe with the chart, it adds two things together right there to show that the confluence with the RSI is looking like it's going to start to move higher as well.
Right.
Yep. MACD, the MACD, which again, I'm not a big, MACD follower, but I like to take a look at it. It's staying above the zero line, which is key. I usually take I like to look at the MACD as like this. When it's above the zero line, the MACD is just indicating it's above the 50-day moving average. So, above the zero line is a good thing. You always want to try to be above the 50-day moving average and above the 20 if you can. But so from the MACD perspective, that's all looking pretty good. Volume patterns, that's where it gets a little bit wishy-washy, but that's okay too, because we're pulling back. We're going to see a little bit of a decline in volume on a pullback. We're not getting any massive red, bars here on down days. It's basically just consolidating. You have some profit taking, but you have support. So from a perspective of which way is the next move, I think the next move is going to be higher, and that might coincide with some of that news that you've been mentioning along the way that's due to come out. With I think the
what is this chart on right now? Like I'm trying to find it up there. Is that a daily?
Sure. This is a daily, and I'm going back.
So if I look at it where your cursor is, you see the little arrow on the bottom here, like where 418 or so. If you look around 418, if you put your that's where my cursor is. So right there, a 418. See right there?
Yep.
Can you expand that right there? That little area right there, like from 418. Can you zoom in? Okay, right there.
April 18th, right? April 18th.
Yeah, so right around there, right there. You see where that little right there? In my mind, if I'm focused on the daily, I would just draw a line this way and then one on the top. And to me, on the bottom, that would be the support, and on the top would be the resistance. And I feel like since 418, give or take on that chart, wherever that red candle is, it's been forming a trend going up and to the right. And if it stays in that level, you're focused on the daily, I feel like as long as it doesn't break your support, this thing's bullish. It's a bullish trend. Like like right there, to me, that would be the new trend line that we're on. And then I go to the other side of it, and that would be the resistance. So it's kind of like your own little Bollinger Band, if you will, right? Like that's the way that I've always looked at it whenever I try to find where's the latest low, like a real key pivotal low, and where there was a reversal. And that was probably in that, remember, it was like that 295 was when we got a real clear buy signal a few weeks ago. So what do you think about that? Do you think that that's pretty legit there? Is that, would you pay, because it's a rising trend line, right? So I think that's where like if it breaks, because it's in a very critical level right there if you look at that trend line. Yeah.
What this is called an ascending triangle, right? And when it now let me just zoom in a little bit, because this is pretty important for viewers too. When we have this yesterday was a pretty key day. It wasn't a doji, but it's like it's close in the sense that we had the open of the day. It fell down through the trend line, and where did it get caught? It got caught at the middle of the Bollinger Bands, but also at the 21 EMA, and closed back above it. But not only that, it held support of this trend line right there from previous days back. So again, everything is bullish about this chart. There's nothing that is showing any signs of weakness in this chart. It's certainly looking bullish to me. And the only question is what's going to get it to start moving up again. News or just, supply and demand. Right now, all of the supply that's coming into the market by sellers is getting bought up, and we're back above the trend line that you just described. Yep. So from a trend line perspective too, we are bullish, and it's a bullish pattern, ascending trend line, ascending triangle. And, the move, there's a few ways to do it, where we can look at where we might go from here. We can basically take, we can take the height and the bottom, low and high from the bottom and to the top. We can duplicate that, and then we're going to bring it on up. Okay, we can probably get a move to about this level here, which is about $500, which shoots a little bit right through your, covered call, your calls there, naked calls. But again, you'll be able to roll them up if needed. But that would take it above the 488 highs from back in December.
And how long, in your experience, would it take for a move like that to play out? 3 to 6 months? Or, I mean, Tesla is different, right? So it's hard to say.
So Tesla is different. Now, if it just goes by basic standards of how these type of charts play out, okay, if we're going to take this area here, which is about what, December to February, so call it 3 months, and we project it out this way, so about 3 months, unless something big hits in between now and then. So, anywhere between 2 and 3 months, and you could be seeing, new highs, or at least through the 470 area.
Right.
Let me just see one more thing now. Let me just see how this compares to a quick Fibonacci drawing. So I'm just taking this area here down to the lows. The 161, which is one of the golden Fibonacci levels, lines up at 460 for a price target, which, if we look to the left, that coincides a little bit better with previous highs. So anywhere between 460 and 500 would be my expected equal move when it starts to break to the upside, 460 to 500. And you're right, you're almost smack dab in the middle. So you're looking good on your strike there, because if you had to roll, you could.
Oh yeah, I would. I'm really trying not to have to do anything for like at least 60 days so I can milk some of that theta. That way I can get higher on the next roll. I feel real comfortable if I can get eventually to like 510, 520. I don't want to move the expiration date. What I would rather do is move the 300 up to like 350, use all those credits, and then roll the 470 to like 510, 520 for a debit. And that way I need this one to expire, because I ultimately, and I can do that just going up and down, right? Like, I can just play the yo-yo or the seesaw as long as my buying power cooperates. If my buying power doesn't cooperate because I have other positions, well, then that's when you have to roll, and you got to put time on the clock, because essentially contracts consist of two main components, time and money. So that's how I'm trying to play it. And eventually I'd like to be at like 200 wide, because on a stock like Tesla, you need 200 points, man. This thing is just crazy. It is absolutely crazy. And I'm thinking about doing.
Let me just take a.
Go ahead.
I'm sorry. Go ahead.
No, I'm saying I was
No,
thinking about.
I'm just going to take a screenshot.
Yeah, go ahead. Take it.
And send it to you, so we have this for reference for future.
Yeah.
Sorry about that. Go ahead, TJ. Are we frozen? Sorry.
No, we're good. We're good. We're here.
Okay. All right.
Yeah, guys. So everybody's like let's talk about the valuation of Tesla real quick, Uzi. Let's while you're setting this up. Guys, nobody right now, this run has nothing to do with their core business. Right now, this has to do with the two verticals that are incoming, which is Robotaxi and Optimus. And there's a lot of people that believe, myself included, more so on the Optimus side of things than the Robotaxi, that line of business is going to be higher than their existing line of business. So it's essentially like Tesla is a pretty established company with two startups. Like, it's got a robo-taxi startup and it's got an Optimus startup. So imagine if the core business didn't exist and we were sitting here trying to value a company that has a robo-taxi startup. They've got 10 cars out the gate. In a month, they're going to have 100. In 6 months, they're going to have a few thousand. In a year, they might have 100,000. So how do you value that ramp up? A, B, you've got some robots that dance better than we do now. And they can do other things a little bit slower than most humans, but they can do other things pretty efficiently. If you get them to do just things that are real straightforward, they're probably more efficient than human beings. And eventually there's going to be real big companies that are going to be like, hey, I want those robots in the factory doing the same task over and over, because there's not going to be no sexual harassment. There's not going to be no insurance. There's not going to be no calling in sick. There's none of that stuff. I know that they're at work because they sleep there. You know what I mean? They're getting charged. So how do you value that kind of thing? And I think that's why Tesla is so difficult, because the measure that you want to use is their existing business, and that's dwindling a little bit. So the fundamentals are getting worse on their core business. And I think this is where financial Jeremy just didn't have any more imagination when it came to Tesla, and that's okay. Tesla's hard. He made a lot of money already. Who cares, right? But then it's like, how do you value the new verticals if you believe in the verticals? If you don't believe in the verticals, like evidently he didn't, well, then sell the shit. Gary Black, you sell it. But the reason that I got super bullish on Tesla is not because of their existing core business. It's because of the incoming verticals that I think are ultimately going to be bigger than their existing business. But they don't have to build the business over again. The business is already there, right? So it's just, Tesla's a monster, bro. It's very, very exciting. So what is it saying, Uzi? Talk to me.
I think Tesla's going to roar. I think it's going to roar. I mean, you know, all the negativity is kind of out of the way now. And I'm not a big fundamental guy. I think you know the fundamentals better than anybody because you have such a large, you know, position in it and you've been researching it. So, yeah. I mean, I think when when it starts to trade on the fundamental on top of, you know, the technicals is when it's going to really explode.
So let's talk about this comment right here. We're 190 PE. Again, you're trying to value the existing business and you're trying to put a number to it. It's the present value of all future cash flows. We don't have any cash flows yet of the new verticals. So that PE could go to like 30 super quickly if once Optimus and if Robotaxi is a real thing. I'm a little less bullish on Robotaxi. Yeah. I'm more excited about the robot. Just calling a spade, because when you look at the entire market cap of Uber and Lyft, they captured all of it. You know, it's whatever.
I mean, there's so many companies out there that are just ridiculously overvalued. Why can't Tesla be overvalued though too, DJ? You know what I'm saying? Yeah. I mean, look at Carvana, look at CBNA, look at Kava, look at some of these ridiculous stocks that, yeah, they're making money, but they don't have the potential to make what really Tesla is going to be making in the future with just on Optimus alone.
Yeah, but this is why Tesla is such a unique company. And dude, it's you either get it or you don't get it. I just read a comment that said fundamentals are meaningless. Like that guy's already on probation, or she. Like I can't even entertain them anymore. Because the technicals are important, the fundamentals are important. They all work in unison at the end of the day. There's some people that are like, oh, I'm never going to look at the charts. So they're like, oh, I'm never going to look at the fundamentals. I'm like, dude, if you want to be well-rounded, you got to look at the whole thing. You know, it's like these charts have a mind of their own at times, and they don't give a shit about the fundamentals. But it seems like over long stretches of time, the fundamentals and the technicals kind of coincide. You know, if you look at a big old gap up on the chart, you can see something on the fundamentals that supports it. If you see a big gap down on the charts, a lot of times you can find something in the fundamentals that broke down that supports the movement. So if you're not looking at both, well, then you're kind of doing yourself a disservice, in my opinion. I think it looks bullish ultimately, and that's why I have the strikes where I have them. I'm a little bit skittish on the 470, but I'm not doing anything now. I mean, it's way out of the money, and I already spent, you know, $4 million to not have to worry because I bought the 500 leaps, right? So now I don't have to look at that position 10 times a day like I was doing that for about 3 days.
So one very important key thing is this, right? When it does get over, if and when it gets over this resistance trend line, okay, we're going to need to see it on some nice big volume. We definitely want to see a big volume bar, and it's got to hold because it's going to probably run up and then test, you know, come back to test it. So technically that's going to be huge. We definitely want to see it hold. When it comes back, you know, it's going to probably come like this, come up. And then it's going to do a back test. It's got to hold.
Yeah.
So that'll be huge. If it does, then it's off to the races. Then there's just no stopping it.
Agreed. I think it looks great. I think it looks awesome. Let's talk Palantir real quick because I know you got to go here soon, and I can't be on here too long either. I've got several FaceTimes. Okay. And I am going to go to the putting green today, and I'm going to go swing my golf clubs and ride the motorcycle and the whole thing. So Palantir,
yeah, it's beautiful day, I think.
Did you already pull a Palantir? Yeah. So same one. I had the exact same one, but I just extended it out. I think I'm in July now. I'm in the July cycle.
Okay. Yeah, these are all your numbers from the last time we had we discussed it. So you still have the 110s and the 150s.
Yeah, nothing changed. The only thing that I did is I added time to the clock. I was when it was 21 days out, I added another 33 days to the clock. So right now I'm sitting on 110, 150s, 45 days out, July the 18th, and I took in a shitload of credits. So I kept the same trade on, just added a month, got paid a couple $100,000 for it, and I feel pretty good about it. I left it at 110 on the low because I think that we looked at the chart last time, Uzi, and you determined that there's more pressure to the upside than the downside. So I was like, well, I'm just going to leave the 110 there, and I'm not going to babysit the 150 unless I have to. But I've gotten almost $400,000 in credits. So if I need to put a 170 handle on there and give back 50, 60, 70 grand, we're willing to do that. We're willing to do that so that we don't get into any kind of trouble. So this is just a game of credits and debit.
Yeah, I mean, this was another just insanely bullish looking chart with no overhead resistance now. We are at all-time highs on Palantir.
Right.
So sky is the kind of the limit. I hate to say something like that, but there really is no overhead resistance to come into play. What will stop it is anyone's guess. But from a starting point, let's take a look again, like we started with Tesla. Where are we with the moving averages? And again, I mean, when you're at all-time highs, it makes sense. You're above everything. So all the moving averages are stacked. Now, what's different about Palantir than Tesla, though, is you have the 50-day above the 200. So you have everything is stacked in unison the way it really should be. 200 is below the 50. The 50 is below the 21 EMA. The 21 EMA is below the 8 EMA. So everything is stacked even more bullishly here than Tesla. From an RSI standpoint, even though it's at all-time highs, the RSI is not overcooked. So we're not even pushing over 70 at this point. Where we're close, but we're comfortably below 70. That it can stay in this uptrend for a very long time with RSI just trending up and to the right without really getting too overheated where it might need a heavy pullback. MACD again, just like before with Tesla, we're above the 50-day moving average, so we're above the zero line. The only thing that's a little the histogram on the MACD just shows that prices, the momentum is backing off just a little bit, but that's fine. It's just pulling back a little bit today. I mean, it's really not showing any signs of weakness. It's just coming down just a little bit today, and it's only just down less than a point on a $131 stock. So that's why MACD is funny. Like this is kind of showing a little bit of a redness to the bottom there, but it's no big deal. Volume profile, as far as how we're looking on up days, we're getting nice green candle bars. Today's volume is significantly less than the average. If you look to the average volume on any given day, okay, we're significantly below that. So today's just a low volume, just sideways type of a day. A little bit of a red candle, but nothing to worry about. And as far as the pattern, it's again, I talk about these all the time. It's just, when you see these cups and then you get the handle here, these have been documented for, hundreds of years from when they started doing charts. I think William O'Neill was kind of big on the cup and handle. He's somebody, if you guys want to read a good book, William O'Neill, he talked about the cup and handle a lot. And, when you get this type of a setup, you've got the most bullish setup really there, aside from maybe a head and shoulders bottom, but the cup and handle is one of the best patterns out there for bullishness. And when you get it, you want to try to get in if you can while it's in the handle. And now it's just broken out of that handle, but it's still time to get in if someone wants to get long Palantir. The question is how do you buy this at all-time highs? Well, we don't know where it's going, so new highs can keep coming as long as the trend stays. And as far as the trend goes, let's do what we did with Tesla. Let's use this low here. You know, we've got the same type of a pattern we've got, which it just broke out of, by the way, you know, an ascending triangle. So we have the ascending triangle, we have a bullish cup and handle, and we've just broken out, and it's probably going to do what it's doing now, a little bit of a low volume pullback to the trend line before it starts to move higher. Now, when I'm looking at a chart that has no overhead resistance, when we have nothing above to really stop it, that's when I usually go to my Fibonacci extensions, and I'll probably look at the golden ratio, which would be the 161. So we've got I would say a price target of about 170 to 175 when it starts to move up with some vigor. And that would be a good price target if someone's long. And isn't it funny, TJ, your price now, your 150 coincides with the 127 Fibonacci extension. So that's a place where we probably get to and do a little bit of a, I call it a hiccup, or a little bit of a time under consolidation where we try to, before you can get through that 127 level, it'll spend some time going sideways. So that'll give you time to roll that up if it gets there before your expiration.
Yeah, I'm hoping to stay in this trade. Well, I'm actually, in a perfect world, I would like for it to expire, because earnings is going to be on the other side if I have to roll again, right?
Yeah, earnings are in August.
I'm going to try to stay in this one as long as I can, so I can milk as much as that 400,000, get on the other side of earnings, let Palantir stabilize for, a week or so. Some of the euphoria will die down, whether good or bad, and then get back into the trade again. Or if I could widen it, if I could roll and widen and go from 100 to say 110 and 150 to say even 155, 160, then I could be like, who gives a shit? I'll just ride earnings. You know what I'm saying? Because I got that extra little juice out of the lemon and made it a little bit of a safer play moving forward, because Palantir's a monster, dude. I mean, again, it's hard from a valuation perspective, but it's also not a very, very mature business yet on Wall Street. Yes, it's been around for about 20 years, but in Wall Street, it's only been trading for less than a handful of years. And you're paying today for what the stock could be worth, for what the company could be worth tomorrow, the present value of all future cash flows. And that's where you have to have a real good handle on the business fundamentally, so you can try to calculate what those future cash flows might be. But if you don't have enough imagination to decide what kind of company this could really grow into, you're never going to be able to make sense of the valuation. And that's where PE ratios and PEG ratios and PS ratios can be very, very difficult and also deceiving. Because if you're only looking at the business for what it is today, it's extremely overvalued. But if you're looking at for what you think, you have an investment thesis that's 10, 15 years out, you're like, oh, this shit's a bargain. I know where it's going, right? So there's always a couple of schools of thought. And that's why investing's hard, guys. It's hard. So what do you think? 110, 150, I give it about a 60 to 70% chance of success if I had to gauge it based on what I'm seeing on the chart there.
Oh, what, your 150 strike?
Yeah, granted, it's 46 days away or 43 days away now, whatever it is.
I think you'll be able to close it. I wouldn't let this try to expire on you. Expire for 100%. I would look to close it when you get to a nice percentage level.
Yeah,
I like to close when I'm doing strangles. I like to close. As soon as we get to 50%, I'm starting to look and evaluate. Well, where are we here on each side? And I'll look to close at 50% on a strangle. So if you can get yourself to 50% soon with some theta decay and a little bit of sideways action, you get 3 or 4 days of sideways action. You might get some good theta decay, and you might be able to get, close to 50%. Take it off the table and then reload, because you can always get back into another position. You don't want to get caught there in case they come out with another contract or some kind of crazy news, and then it rips right through the 150 with 30 to 40 days to go on your expiration.
Yeah,
that you get, that's a double-edged sword. That gives you extra time for it to correct. But if it doesn't correct, that gives you behind the 8 ball now, because now you still have so much time on, before the expiration, that it could keep going, against you. So with strangles, I like to manage them around 50% when you can get that. And then you can always open up the other side.
Well, if you're getting 50% on both sides, that's the equivalent of 100% on one side, typically, right?
Right.
That's why short strangles are so intoxicating. But yeah, I'm collecting about almost $9,000 of data on this particular. All things being equal, there's about $9,000 that goes to the bottom line for us on this one. So it's a really nice data collector. Well, Tesla is settling right at 350. I think that's a nice level. It'd be real nice to see it even at like 352, 353. That would be a real solid close for Tesla. And I think Palantir is gonna chill out here for a minute. There's a lot of great news that's already baked into the cake. I'm just talking about fundamentals now, right? So they, I really think even another huge contract maybe sends it up at the most another 10%. It's just, I think this is going to be another wait and see earnings. We got to look at what event Palantir might have. This is where Palantir and like the Robinhoods of the world, they're real fun companies for real retail investors because they're really good at keeping you abreast of what's going on. Whereas it's like SoFi has fireside chats, but like nobody watches the fireside chats, you know what I mean? So it's just, it's real hard to like keep up with what Noto said or didn't say because he rarely talks. Whereas a lot of these other companies, they do a really good job of keeping you updated as to what's going on. And I think that communication is an effective skill set for CEOs and stuff. And I think that a lot of people can learn. A lot of people can learn from the Alex Karps and the Vlads of the world because they do a real good job of communicating with not just retail but institutionals as well. I mean, dude, the analysts, they want to know what's going on, and we don't have to be going on like an archaeological expedition. Like, just tell us what's going on with the company. Like, I don't know why some of these CEOs are so damn secretive. You want us to buy the damn shares? Tell us what's going on, right?
I think they're afraid half the time.
It seems logical to me, or am I off base here, Uzi?
They're probably afraid of getting caught out there by saying too much. You never. Although I'm sure they talk on the golf green to their friends.
I mean, dude, nobody says more about what's going on with their company than Elon Musk. So if people have ever wondered, why do people love Tesla so much? The retail, because this has been a retail heavy stock, right, for most of its years on Wall Street, and about 15 years now on Wall Street for Tesla. Is because we love the communication. You know what's going on with the company. You know their roadmap. You know what they're trying to do. And Elon isn't worried about anybody else trying to duplicate it because he doesn't think anybody can do what they do, right?
Mm-hmm.
Palantir is like, this is what we're trying to get done, and we know that you can't fucking do it, so we ain't worried about it. And then our boy Anthony Noto is like, we don't want to say anything, so we don't want anybody stealing our roadmap or whatever. So it makes you wonder what do they have that's proprietary, if anything? Because Palantir isn't worried about somebody knocking off what they're trying to do because they know that other companies can't do what Palantir does. And Tesla, how many companies are really trying to solve autonomous driving, right? Like, there's a handful at best. And there's only one that's doing a decent job at it, which is Google's Waymo, right? Other than that, I mean, it's a two-horse race. That's it. So, there's some Chinese technology that some people say is pretty damn good. It's not available to us here, so I don't know. I can't confirm nor deny. I use full self-driving supervised versions here that Tesla offers, and I can tell you it's pretty damn good. I'd say it's about 95% of the way there. There's that 5% that's going to be hell, but if they can incrementally get it, 1% a year or something like that, it could be something very, very, very special. It already is. It does a lot of the heavy lifting. But communication's key, man. Like, if you want your retail community to get excited, communicate with them. We don't want to have to keep digging through 10Ks and 10Qs and going to try to find these interviews that you did a year or two ago. like keep us at the speed and let us know what's going on. The only thing that we ever have to go on with some of these companies is the earnings calls. And then we wonder why they didn't address certain topics and stuff. And then you leave with more questions than answers.
Right. By the way, thanks for correcting me. It's actually Peter Lynch. Thank you. Bill O'Neill, I got confused. It's Peter Lynch. He's got a great book out there. You guys should read that one. He talks a lot about some of the patterns I talked about. Bill O'Neill. I don't know where I came up with Bill O'Neill. It's Peter Lynch.
Bill O'Neill is the Investor's Business Daily guy.
Right. Yes. Yes.
And
yep.
how to make money with stocks. That's his book.
Yep.
That's one of the first books that I thumbed through in investing was Bill O'Neill's book. He was the founder of Investors Business Daily. It's a publication that used to come out. It was like, the Wall Street Journal, right? But
exactly. Oh yeah, we couldn't wait for that every week, every Saturday.
Dude, it was awesome, bro. Like I would thumb through that as a kid, and I was like, I don't know what I'm reading, but it's exciting.
Yep. So. Yeah, his company, his company is still around. There's people that still, his stuff is still out there.
Yeah. Notice that he doesn't want anybody copying his big, hairy, audacious goal. It really sounded, I love me some Anthony Noto, but that sounded like a bullshit cop-out statement when I heard it. He did it with Liz Young. He was on Liz Young's podcast. I'm like, bro, if you're confident in what you're doing and nobody else is going to be able to do it, I mean, you should be able to put yourself out there a little bit. I don't know. I just thought it was a disappointing take on my end. Again, this is just my perspective. I think Anthony Noto is the best CEO for SoFi. I don't think anybody can do what Noto does for that company. Yeah, dude, I think Palantir's a monster, bro. Again, valuations aside, because if I get stuck on valuations, I ain't touching this thing. But
I mean, look at what it's gone through. This huge pullback from about 127 down to 70 bucks. So it's, anybody that was looking to get out or get stopped out or, take profit, they're out. Now it's the diamond hands now holding it. It's you're a diamond hand, and this is going higher, man. It's going higher.
Yeah, I was reading that there's a lot of people that think this thing's going to have a 200 handle by the end of the year. I was in the camp that it would have a 100, that would have a 100 handle by the end of the year. And now I'm looking at the chart and I'm like, I'm thinking it could have 175. Like this thing, like what's stopping it up here? There's not a lot of resistance up here. It's just, and then some of these people that own these shares, they laugh if you talk to them about a PE ratio.
I haven't checked the short interest on it, but I mean, that's probably part of what's driving it even higher is the shorts.
It's pretty low, actually. I think Palantir is not a heavily shorted stock.
Let me check.
I don't know if it tells me that on stock analysis or not.
It's actually only 2%, I think. Yeah, it's only 2%. Yeah. It's only 2%, which is very low.
Yeah.
So it's not even the shorts that are driving this. This is strictly, funds, mutual funds, hedge funds, investors, and it's cheap enough that the average person can buy their partial shares or whatever. It's still affordable. I mean, it's crazy, but it was $20 a year ago.
Yeah, it's a monster, bro. It is a monster. So I'm excited about it, but I do got to run, Uzi.
I'm going to show you one more monster. Here's a monster for you, Groupon. Look at Groupon. Can you believe this thing is still in business? Do you get Groupon mailings by you, TJ?
Yeah. So when was it?
$10. It's almost $30. It's $33. And we were in this earlier in the year, but I didn't see 30 coming.
In 2019, I wanted to go full time, and I went full time in March of 2019. I think it was 2019. It could have been 2020. I gotta go look. But anyway, it was during COVID. It might have actually been 2020. But I was out of the oil field. Yeah, it was. It was in 2020 because my daughter passed September of 2019. So it was 2020. But I started swing trading. And Groupon was I want to say it was, if it wasn't the first ticker, it was one of the first top 5. And I did a successful swing trade with Groupon back then. So the reason that I liked Groupon is because I have a wine tour business, and I used to have a Groupon. Like I used to have a Groupon. Like I used to pay for advertising on the Groupon, and a lot of our business would come from Groupon. Because you go to get the good deal, right? It's like a group coupon or whatever. So the wine tour business did really, really well on Groupon. So it had a nice little place in my heart, if that makes sense.
Mm-hmm.
But dude, this is crazy. This thing was sideways for a long time, right? And then what happened? How did it resurrect? Did anything happen, or is this just all technicals?
It's all technicals. It's a cup and handle breakout on the daily, just a real long cup and handle. Back in August to about April, and the move has just been. This is the effects of a cup and handle. This is a big cup and handle, so that's why you're going to get this crazy move. But it's heading to that 35 level, and that's a Fibonacci touch point. I mean, look at how it ran right to the 161, pulled back right to it, and then right off again. So. Yeah. Technicals are, they work. For anyone that laughs at technicals, I don't know why, but yeah, I just wanted to bring that one up to you because I was looking at it with the guys this morning. I was like, this is crazy. We were selling puts. When, back in March. We should have just been buying calls is what we should have been doing. But
yeah, dude. Like I'm looking over here as we're talking. And the calls, have the 500 long calls, and those are up $216,000 today on Tesla.
Nice.
So the short calls are down 136, but the long calls are up 213. So it is a very effective hedge right now. And then the short puts are up 106. So the entire position is up 185,000. If I didn't have the long calls in place, the position would be down about 30,000 for the day, because the short calls have a higher delta than the short put, and which is kind of surprising, right? Because 300 is closer to 350 than 470 is to 350, but it's just because there's upward momentum on the stock.
Exactly. Yeah.
So
yeah, they have a term for that.
These are things you could look at. Is you could look at where's the stock trading, and then you go put on a put and see what that premium is, and you go the same distance on the call side, and if there's a lot more money on one of those, then it lets you know where the momentum is with the stock, like with the gamblers, right? The people that are buying the option. Those are the gamblers. So that's a real good indicator that stock is, people are betting on the stock going up, is what I'm saying.
Oh yeah, no doubt. You have a question there from SJ Tavares. What strategy would you be doing if you had, say, 25,000? There's a lot of strategies you can do with 25,000, SJ. I mean, there's a lot, and especially if you have if you have a good account with a good broker, you have margin. You can, not that you're going to go on margin by buying things, but you'll be able to use less buying power to put on some certain positions. Naked strangles like TJ's talking. But you can do a lot. You could do spreads. You could do butterflies. You can do iron condors. I mean, there's so many. A lot. There's plenty with 25,000.
Yeah. If I had 25 grand and I was going to just do one stock, I would probably, to make money, like to really make money for me, I would sell a leap. I would sell a put, and then I would sell calls along the way. So instead of buying leaps, because you can't afford to gamble with that kind of money because you got to be right, I would sell the leap and then use those premiums. And then I'd start selling calls against those leaps. So you need to be in a brokerage that would allow you to do that, first of all. So I don't think Robinhood would allow you to play that particular game. So I would sell the leap, and then I would sell some short strangles around that leap.
Mm-hmm.
So it's almost like an inverse type poor man cover call, but on steroids, because whenever you're doing the poor man cover call, you buy the leap and then you're selling calls. I'm like, no, I'm selling the leap and I'm selling puts and calls along the way to get both sides of that. And then you look up a year later and you're like, shit, I got 40, 50, 60% return on my money. And that's kind of what I'm doing with my son's account, but I'm just doing weeklies right now. And it's really starting to work. Whenever I get it up to 100 grand, then I'm going to implement that strategy for the long haul. But yeah, I got to get rocking, man. I got some calls that I got to do, and then I got to go check out the Neo earnings. I know it had earnings today. I know they lost another $1 billion. Jesus, it's crazy. And I got to go monitor all of the accounts, and then I got some FaceTimes, and I do want to spend some time on the golf course today.
Yeah, man, that should be good. That should be a good time. It's a beautiful weather day over here in New York.
Yeah. Next week, not able to do it, brother. We're going to be in Turks and Caicos.
Very nice.
Next week, if I go live, it's going to be from a beach eating some pineapples.
Sounds like a good time, man. Hey, pineapples and have some watermelon. That's good for you're cutting down.
Dude, I'm freaking drinking a lot of water. I'm only having 2 meals a day right now. I'm just not hungry. So it's give me a couple of months, man. I'll lose another 10, 15 pounds and I'll start looking the part again. And I'm already starting to feel the part. So you got to feel it first before you look at it. But anyway, man, I got to get rocking and rolling. TJ the Will Deal signing off with Uzi Options. As always, may your sky stay blue, stock screen. Peace out. God bless you guys.
Okay, take care, guys.
Appreciate you, Uzi.